Latin America is beating the world at wasting opportunities. Region's presidents should be making the most of a rare chance to prosper. Latin America is blessed with abundant and cheap renewable energy. It is one of the world's biggest food exporters. It is at peace, far from global conflicts, and its nations are mostly robust democracies. It is close to the US, ideally placed to profit from the moving of production from China. Yet Latin America's presidents seem to have other priorities. Rather than figuring out how Brazil can compete with India to assemble iPhones or win investment in microchips, President Luiz Inácio Lula da Silva wants to build oil refineries, revive shipbuilding, and pursue a currency union with near-bankrupt neighbor Argentina. Lula's apparent missteps come as Latin America is, surprisingly, struggling to manage good economic growth. This should not be so hard. Recent geopolitical trends have presented the region with some extraordinary advantages. Mexico should be the best-placed Latin American nation to win so-called near-shoring business, given its proximity to the U.S. and its free trade agreement. Mexico's peso continues to enjoy its day in the sun. In May, the currency reached its highest level against the U.S. dollar since 2017, following positive U.S. economic data releases. In the first quarter of 2023, the peso rose more than 7%. The peso's strength is nothing new. In fact, it has emerged as the world's strongest currency over the last several years, thanks largely to capital investment from the United States and China and a tighter monetary policy. In annual terms, the agency added, the economy expanded 3.7% in the first 3 months of 2023 compared to a year earlier. That was slightly below the 3.9% growth expected by the market and projected by last month's preliminary data. Chile's left-wing President Gabriel Boric outlined a strategy to exploit the country's abundant lithium reserves last month. It ticked several boxes: greater concern for the environment, consultations with local communities, a desire to use a rare opportunity to boost economic development. One missing ingredient: any incentives for mining companies to choose Chile over other competitors for lithium investment. The leftist president's decision to put future lithium projects under state control sliced $5.7 billion off the value of the two companies currently mining the white gold in Chile. The Peruvian economy rose 0.22% in March this year compared to the same month in 2022. Likewise, the INE reported that in the first quarter of 2023, the national economy fell 0.43%, while it expanded 1.68% in the last 12 months. Peru's inflation rate based on the metropolitan region of the capital Lima fell to 0.32% in May, but the rate of creeping consumer prices still came in above the 0.25%. Mining sector grew 9.28%, due to the positive performance of the metallic mining activity, 8.70%, which is associated with higher volumes of production of copper, 19.9%. Ecuador faces a tense political dynamic in 2023. Embattled President Guillermo Lasso has struggled to govern. His government has failed to contain a surge in organized crime-related violence. In 2023, Ecuador's economy is slowing and expected to grow by just 2.6%. Right now the outlook in Ecuador is complicated. Foreign executives doing due diligence on potential investment projects in Ecuador need to understand the country's evolving political risk dynamics. Reacting to what they see as an anti-business climate, many of Latin America's wealthy have been shifting assets overseas in the past 2 to 3 years rather than investing at home. Many countries in the region are going through an inward-looking phase and may be at risk of missing out on the opportunities that are out there in the changing global context.